Gentlemen, good day and welcome to the Q2 and H1 FY2026 earnings conference call of Electrosteel Castings Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hiral Kenia from EY LLP. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone. On behalf of Electrosteel Casting Limited, I welcome you all to the company's Q2 and H1 FY26 earnings con call. To discuss the performance of the company, we have with us from the management team, Mr. Madhav Kejriwal, Whole-Time Director, Mr. Sunil Katyal, Whole-Time Director and CEO, Mr. Ashutosh Agarwal, CFO, and Mr. Gaurav Samwani, General Manager Finance. Before we proceed with this call, I would like to draw attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management's control. We kindly request that you bear in mind that there may be uncertainties while interpreting such statements. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for interactive Q&A session. I will now hand over the conference over to Mr. Madhav Kejriwal for his opening remarks. Thank you, and over to you, sir.
Thank you, Mr. Hiral. A very good afternoon to all. Thank you for joining us. The environment over the past few quarters for the ductile iron pipe industry has been challenging, and this quarter reflects the same. The ductile iron pipe segment continues to face demand slowdown due to delays in government spending. Consequently, production levels have been moderated, costs have increased, and there's a downward pressure on pricing. Collectively, these factors have impacted profitability and created a challenging operating environment. That said, despite these headwinds, our other business segments such as cast iron pipes, ferroalloys, DI fittings, and exports, along with the higher other income, have supported the overall performance. Our balance sheet continues to remain strong, underscoring the company's inherent financial resilience. We are certain that the current phase is a temporary adjustment rather than a structural shift. The sector's fundamentals remain strong, and we are optimistic about the medium to long-term outlook. The nation's development vision is deeply linked with the creation of robust infrastructure, and we see the government's continued commitment to expanding drinking water and sewage networks as a major driver for growth. With this, I'd like to hand over to Mr. Sunil Katyal.
Good afternoon to all. It is the extension of the Jal Jeevan Mission to 2028, coupled with expected demand from river interlinking projects, irrigation through pipe networks, and the replacement and maintenance work which is coming for the old pipelines and all that, underpins our confidence in the long-term growth trajectory of the sector. Where the pace of recovery may take a quarter or two at the most, as it looks, we anticipate a strong rebound beginning in calendar year 2026. Additionally, I'm pleased to share that following our acquisition of the TIS valve business in Europe, we are progressing with plans to integrate valves into our product portfolio overseas as well as in India. To conclude, while the challenges we face are transitional, the opportunities ahead are transformational. With robust demand drivers, government initiatives gaining momentum, and our expanded product portfolio, we are confident that Electrosteel Casting is well positioned to deliver sustainable growth and create long-term value to all our stakeholders. Thank you, and we are looking forward for sharing more details as we proceed. With this, I would like to hand over the floor to Mr. Ashutosh Agarwal, our whole-time Director and CFO, for taking you through the financial highlights.
Thank you, Katyalji and Madhavji. Good afternoon and warm welcome to all the investors joining for this call. Sales volume of DI pipe fittings and CI pipe during the quarter stood to 1.39 lakh tons, down by 28% year-on-year, which impacted the overall financial performance of the company as intimated by Madhavji and Katyalji. For the half-year, sales volume was 3.02 lakh tons, a 25% decline compared to H1 of 2025. Decline in volume was primarily due to slowdown in the domestic market. However, export market volume grew by 8% year-on-year, partially offsetting the weakness in domestic demand and providing support to overall business performance. During the quarter, other income includes provision written back to the extent of rupees 64 crores following the settlement of anti-tax matter of West Bengal government, which was one-time payment only. This provision has been created in the books during the financial year 2013 to 2018, and the following settlement, it was no longer required. The reversal also resulted in a corresponding reversal deferred tax amounting to rupees 21 crores. Net debt at a standalone level stood to 1,626 crores. The utilization increased by around 230 crores compared to June 2025, mainly due to cash outflow relating to acquisition of valve company and other business requirements. Interest cost more or less remained stable in spite of high utilization, supported by lower borrowing cost. Now I will take you through consolidated financial results for Q2 2026. The total income stood to rupees 1,491 crores, lower year-on-year, primarily due to reduced in sales volume. EBITDA, including other income, stood to 188 crores with a EBITDA margin of 12.6%. EBITDA, excluding provision of write back of 64 crores as intimated to you earlier in this statement, stood to rupees 124 crores. PAT was set at rupees 78 crores, translating to PAT margin of 5.63%. Now I'm highlighting our consolidated performance of H1 2025-26. Total income stood to rupees 3,077 crores. EBITDA was 386 crores with an EBITDA margin of 12.6%. EBITDA excluding write back stood to 322 crores and PAT was reported to 167 crores. Moving to standalone results of this quarter, total income stood to 1,283 crores, lower year-on-year due to reduced in sales volume as intimated by Madhavji. EBITDA was rupees 174 crores with an EBITDA margin of 13.5%. EBITDA excluding the provision written back of 64 crores stood to rupees 110 crores. PAT stood to 76 crores, translating to PAT margin of 5.9%. Now I am highlighting our standalone performance of H1. result. Total income is to 2,709 crores. EBITDA was 360 crores with an EBITDA margin of 13.3%. EBITDA excluding provision, the write back stood to 296 crores. PAT reported to rupees 162 crores. With this, I would like to open the floor for the question answers, if any. Thank you very much.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then 1. Our first question comes from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hello.
Yes, please.
Yes. So my first question pertains to, so as we expect that the demand would be rebound in starting calendar year 26. So just wanted to understand on your part, so what makes us so confident enough that the demand will rebound? Because like in last 12 to 15 months, the JJM has been slowed down and we are witnessing challenge in terms of fund flow. So just wanted to understand your view.
Sir, as we are, there is definitely work pending to be done, which is evidenced from the fact that there is adequate order book in the market. It's about whether that order book materializes to material getting dispatched. Now, the level of activity that is taking place, if you see, even in the news, it's highlighted that the central government is working towards getting clarities on certain issues that have been reported to them, and they are doing this because they have a clear intention that they need to clarify these issues and continue with the project and implement whatever is remaining to be implemented. So this Jal Jeevan mission is definitely something that is there at the center of the government's attention, and they want to move on with it and tick mark the complete box, So for that to take place, they will have to allow the projects to finish, and that will require funding, and they are quite keen on that once they get clarity on certain issues that have been highlighted and reported to them through the local authorities and by the society and population in general.
Got it. So just wanted to understand the second thing is so we have seen some key challenges also by the government, and so there was a key notification also mentioned by the government that there are some work has not been done as per the guided timelines. So is that outcome has been considerable by the government, and or it is still under purview by the government?
So there are multiple issues that have been highlighted to the government. One of which is non-timely completion of projects. So in certain cases, that is a fact. Now, some of the delays have happened due to funding constraints. Some delays have happened due to operations. Some delays have taken place due to administrative problems. So it's kind of a mixed bag of a lot of things. And the problem is that water being a state subject, the administration is very much distributed and diluted at the ground level. So to accumulate and come to a conclusion for something like that takes time. And that's why they're taking a little longer than what it should to come to conclusions for the underperformance. Once that clarity is there, I'm very certain that things will restart. I'm sorry, you'll have to forgive me. I'm a little unwell, so I might not be able to. I might break in my sentences.
Yeah, not at all issue, sir.
So the long and short story is that they will take a little bit of time to come to the conclusions of why certain delays or certain incorrect laying and other such problems have happened. But most definitely corrective action and further implementation of the program will happen. If that was not in the interest of the center, then they would have probably not extended it with an enhanced budget, and they wouldn't be following up so aggressively to draw conclusions. It's because they can restart the process.
Got it, sir. My last question would be, so the government is representing that they have done a work of around 81% around of what they have been planned to commit it. So just wanted to understand on the ground reality, how much percentage of work has already been laid off or how much percentage of work has been done considered to what they have been stating out?
Sir, functioning household tap connection would be close to 50%.
Okay.
Between 50 to 60%.
So still 40% work needs to be done. Then what?
I would say from the supply of pipe perspective around 40%, and from the work on ground perspective probably 50-55%.
Okay, got it. Thank you so much. I will join back in the queue.
Thank you. Our next question comes from the line of Sailesh Raja from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. There was an article in the Indian Express today mentioning that the central government, as you rightly pointed out, that they have been taking actions against several officials and contractors across multiple states and union territories also, following the complaints that they have received regarding the financial irregularities and poor quality of work under the JGM. So some states still they have not shared complete details with the central government. So do you think that once this review process is fully completed, then the government will resume, or they will accelerate fund deployment under this JGM program? You are confidently saying that from the beginning of the calendar year, it will start, the government will deploy the fund. So can you give clarity on this? What gives you that strong feel that it will start?
So there is, based on the progress they've made so far and the further inquiries that they've shared with the states, that makes me feel that starting calendar year, they would have reached their conclusions and they will start opening up the funds. And as and when they do that, there's always a delay of 2-3 months for it to show in your books, in your performance, because they're built up of stocks and everything that's associated with it, like how when there's a slowdown, it took a quarter to take effect. So I'm, based on those movements that I see, I'm fairly confident that starting next calendar year, things will start moving. Right now, there's a deadlock because of dissipation of information and scrutiny. Once that scrutiny comes to a conclusion, based on the conclusions of the scrutiny, maybe some states will start much faster, some states will require further scrutiny, but definitely it will start.
Okay. Sir, what can you give volume guidance in this year? And also, if demand comes back, can we expect double digit in terms of kg, I'm asking. So in this quarter, it is around 6.5 rupees. Can we expect this is bottom, or do you see further correction in next 2 quarters? And next year, with expected improvement in the demand, can we expect double-digit EBITDA per kg next year? Because the supply, there is an increased supply in the market. So could you please give clarity on this?
Sir, starting next year, I think starting Q2 next year, we can start seeing a dramatic improvement in the production levels and also in the margins per ton. So definitely, I think a double-digit margin per ton is very much achievable starting Q2 next year. Q1, things will start moving. Q2, there will be a pickup, and then by Q1 there will be a pickup, and Q2 we will be pretty much established at.
This is financial year you are talking.
FY, yes, sir, yes.
Yeah.
First Q4 this FY, and then Q1, Q2 next FY will be you'll see an incremental improvement as per our assessment.
Okay. So what is the total volume you are expecting this year?
This year, possibly it could be 550,000 or around that.
Okay. So, what about the next year, sir? How much you are expecting with whatever that you are saying that it will come back? So in that case, what could be the number for the next year?
Next year, as of now, we are thinking that we should get to possibly between 8 lakhs to 8.5 lakhs, in that range.
Okay, great, sir. Sir, what is the capex plan we have, sir, this year and next year?
For this year, predominantly we are focusing on sustenance capexes, like at Chirikala, we are rebuilding one of our battery. And apart from that, the major focus is definitely on sustenance-based capexes. Figure, it may be difficult for me, but possibly around 300 CR or so. Everything put together.
Okay, sir. Yeah.
This would include minor debottlenecking capital expenditures as well. So
okay.
A mix of maintenance and debottlenecking. There is no major capex per se that is planned for this financial year or the next.
Okay. Thank you, sir, and all the best.
Thank you very much.
Thank you. Our next question comes from the line of Rudraksh Raheja from iThought Financial Consulting. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, could you throw more light on the gross margin expansion in H1 FY26? We have seen some revenue contraction, but gross margins have expanded.
So hi, gross margins was around 48% for the first half. It has been more in line with what it was last year, because the prices of the products have come down, but also at the same time raw material prices have also come down, and hence gross margins have been intact. Revenue has come down, yes, because what we said, as we mentioned, the volumes were lower, so revenue got impacted during the first half.
Got it, sir. And sir, the other income component is higher in H1 of FY26. Could you provide more details on that?
Other income increases just because of reversal of our previous liability, which I said in my opening remarks, on account of this income tax matter. Income tax matter got resolved, and there was a case going on with the government of West Bengal. 64 crores amount has been reversed. That is why the other income has increased in the PNL.
Got it, sir. The employee expenses, I'm assuming that since we have added some capacities since last year, so employee expenses have increased in line with that. So going forward, do we see this 150-160 crores as the quarterly rate, or do we expect more increase in employee expenses?
There might be a marginal increase in the employee expenses as we expand our business in the valves product portfolio. In fact, this increment is largely related to that portion. So there will be a marginal increase, but it will not be substantial enough, really. It might be that it goes to 165 or something like that.
Understood, sir. So I think I may have missed on the volumes part. You said you were expecting around 5.5 lakhs in FY26. So
between 5.5 to 6, somewhere between that.
Yeah, and how much have we done in the first half?
2.7.
Okay, understood, sir. And sir, do we have a sustainable maintenance capex that we have to incur every year? Let's say we are not expanding in any year, but still we have to incur some maintenance capex. Do we have a number for that?
No, in fact, we had a broad plan for the next 3-4 years. We had planned that possibly it could be around, say, 500 CR for next 4 years.
So, and any kind of capacity addition would be over and above this 500 crores?
Yes, please. This is, as already clarified, it is predominantly for sustenance, and some component of that is for debottlenecking only.
Understood, sir. Understood. Thank you.
Thank you.
Thank you. Our next question comes from the line of Deepesh Agarwal from ICICI Prudential AMC. Please go ahead.
Hi, sir. Good evening. I can see there's a dramatic increase in your overall cash and bank balances. Like on a consolidated basis, we have gone up by more than 400 crores. So is this on the back of the subsidiaries or anything else?
So it's there were some fixed deposits which, as per Ind AS, beyond 12 months were clubbed in other non-current assets, which are now supposed to get matured and hence has been transferred to current assets. So it was always there in the books.
All right. Where is our current capacity standing at? I think we had plans to scale up to 1 million tons by the end of this year. So where are we standing, and are there any plans to incur any more capacity addition?
So we were looking at a capacity expansion to 950 to 100 million, to a million, 950,000 to a million. At the moment, our installed capacity remains at 850,000 tons, and we are hoping to get to 90-95% of that figure next financial year. Due to the slowdown in the domestic market, this financial year we've had to moderate our tonnages. As mentioned, we will be getting somewhere between 5.5 lakh to 6 lakh tons, 550,000 to 600,000. As for the capex for the expansion from 850 to 950, at the moment, we have kept it on hold till there is a cleanup of inventory and pickup of capacity to 850,000 tons, and after that we shall take a decision.
Right. Just a couple more questions. During previous calls also, I think you have highlighted that, in order to reduce the dependency on JJM and expand more revenue streams, there were certain other investments being done in terms of gaskets, in terms of the acquisitions, and even the subsidiary we had, and even acquisition we made in Vietnam. So any update on or any progress that has been made in all of these areas?
So acquisition in Singapore, I think you mean.
Vietnam is a company.
I meant the Singapore. Yeah, it's Singapore. Yeah.
Yeah. So, sir, Singapore, we have seen positive results for the quarter and half yearly. There is a slow increase in the other product portfolio within Singapore, where we are seeing that almost 40-45% of its revenue is coming from other items that we are buying and selling over there for the water and gas companies. As for TIS, it has only been merged. It's been 2 months. We are very much deep into the integration process, and I think by the end of this FY, we will be pretty much in tune with them, and there are aggressive expansion plans that have been put in place for that. Of course, once they are concrete, we will be able to share them exactly with you. But definitely these two factors are going to play, especially the valve is going to play a big role in diversifying our portfolio and our both geographic and customer base.
All right. Thank you. That's all I have.
Thank you. Ladies and gentlemen, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Rajesh Agarwal from Moneyore. Please go ahead.
Sir, out of the pending order of 6 to 7 months, how much is government order of Jal Jeevan and private orders? Can you quantify?
Around 60% would be JJM. If you include domestic, it will be around 50 to 55%. Okay. And the rest is non-JJM and export.
Okay. So we'll continue to getting a how is the traction in non-JMM orders? That is good for the this balance 40%.
So that is even Amrut at the moment is a little slow, slower than the pace that it had at the beginning, but it's not poor in the sense that it's not on hold like it is with JJM. But irrigation has picked up quite well, and at the moment, the entire industry is largely operating on irrigation and a fair bit of Amrut.
But there's a traction in irrigation orders? Other irrigation?
Good, decent traction in irrigation, please.
Okay. And so my next question is that Indus Water, whatever is there, government is moving very fast. That project DPR reports and everything has been called. So can that be a big opportunity for us?
I'm sorry, you weren't very clear. Which water?
Indus Water Treaty, which also has scrapped. I think government is moving fast. They are called for a DPR and all. In fact, next 6 months when they will be started allocating orders. So whether that is a good opportunity for us, big opportunity for us?
Sir, it will be a good opportunity, no doubt. I mean, the River Link project as a whole, this will be a similar natured project as the River Link. It will be a diversion of huge volumes of water.
Okay.
So this, along with the River Link, seems like a good opportunity. Of course, the initial movement, divergence of the route is done through canal. Okay. But then all the distributaries of that which go into irrigation and drinking water will use piped. So with a slight delay, there will be good opportunity coming up from that.
And the government was saying because the nextlet areas which have been cleared, that also is a good area of opportunity for irrigation if the work starts there.
That actually is something that is going to probably fructify even before the River Link.
River Link, okay. And so, okay then. So then third, so our payments also have got stuck with the EPC contractors?
A little bit, sir. There is a slight increase, although we've been very disciplined about it, so it's not shot up too much. But our there have been delays through the EPC contractors. A couple of major delays had happened with the government departments, but that is slowly clearing up now.
Because what I have heard from the other players, there are a lot of orders pending in the system, old orders, not the new. The payment for that has not been released, so people are going slow on that order.
So as I was mentioning earlier in this call, there is no dearth of order. It's the dearth of dispatchability of that order because of the stoppage of the fund.
So any particular reason for stoppage of fund? Because this year also government has spent only 4% of the allocated in the budget.
So
any particular reason?
They want to try and understand why there are certain delays and why there are certain complaints and reports that have gone to them which are negative in nature. And only it's like a check back mechanism, sir. So they're trying to course correct before it gets too late.
Okay.
So there's a temporary slowdown or temporary shutdown for that reason.
And sir, one question: whether a lot of hydroelectricity projects will come in Brahmaputra, and whether that also are opportunities for us?
I'm sorry, sir. Many what projects?
Lot of hydroelectricity projects will be also coming in.
So that will give a slight push to our pipe business, but it will give a very good push to our valve business.
And so now there are two bookkeeping questions. Whether this quarter the acquisition which we have done, it includes the revenue for that acquisition, Italian acquisition?
2 months revenue.
Huh?
2 months revenue.
That is how much, sir?
That is 55 crores.
Okay. And in that we have EBITDA level, we are breaking even? No, we are making money?
Yeah, it is more than break even.
More than break even. So that business has the opportunity to scale up?
Definitely, yes.
Okay. And so last question, when you said 60 crore was the other income extra for the entry tax, and you said below, what is the net effect? I want to understand the net effect on other income.
Basically, 60 crores is 4 crores is on account of entry tax. There was some income on account of FD interest.
Okay.
On the fund we got from the railway department, we got the income on the FD. And some 6 crore refund we got from the department, that is also included there.
Okay. So the net effect is how much? That is what I wanted.
Net effect is around 85 crores.
85 crore is extra other income.
No, the interest on FD is not extra other income. It is a regular income since last 2 years.
Understood. If you take that out.
Sorry to interrupt, Rajesh sir. May we request?
That is the last question. One bookkeeping one.
Sir, there are several other participants.
Okay. Thank you.
Thank you so much, sir. Our next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar, sir. Thank you for the opportunity. Hope I am audible, sir.
Yes. Yeah.
So, sir, on the receivable front, are we also facing any issue, or those payment are in line with the deliveries that have been done as on date?
There is no issue in regard to the realization of the receivables. There are certain delays that are there, but they're all backed financially by BGs, LCs, etc. Our clean credit exposure is less than 1%. So that is practically nothing.
And what should be that amount, sir, where we have this underlying BG and all? How much should be the receivable?
Almost 100%.
So 99% of our receivable today is against BG or LC.
Okay. Sir, any update on the coal compensation part? I think so. Lastly, there was one asset that was valued, and so any follow up on the same? What's the currently the roadmap for the same?
So there are some clarities that are being requested for by the allottee. JSW. So we've submitted our answers against all those clarities, and we are hopeful that within this financial year we'll get some at least on the asset which has been valued. At least we should see further work.
And pending revaluation, and how are things progressing there?
So that will happen one after the other. They've cleared a very big chunk.
Okay.
Out of our 1,200 crore, I think we had received around 80 something earlier, and this is around 500. So half of it has been cleared up. Now once this is cleared, then they will start working on the other aspects, and then we'll see where we get to.
Okay. Sir, in the cash flow, we have made a payment of 120 rupees for business acquisition. So this is pertaining to this Valve company only that we have paid?
Yes, please.
Okay. And when will we start seeing the revenue and how have we outlined the business that we are emphasizing going ahead for the remaining part of the year?
So, sir, this since it's only been 2 months since we've merged, and it's a same industry but very different product. So this particular year we will probably see a similar performance as it had last financial year, which is approximately 37-38 million euro revenue with profit margins of around 8 to 10%. I'm talking about profit margins, not EBITDA. EBITDA is around 15-16%. And then starting next year, once the integration process is done, we should see good jumps. What those jumps will be, sir, I'll only be able to tell you after maybe in the next financial year itself, maybe quarter 4.
So total cost of acquisition is 120 only. We have paid the entire money.
Yes.
Okay. Correct, sir. That's all, sir. Not much to discuss. Everything is answered. So thank you, sir, and all the best, sir.
Thank you.
Thank you very much.
Thank you. Participants, you may press star and then 1 to ask a question. Our next question comes from the line of Rajesh Bhandari from Nakoda Engineers. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah, to one of the questionnaire, you had said that this year it will be 5.5 lakh tons per annum, and next year it will go to around 8.5 lakh tons. What makes you so confident, sir, that it will go to 8.5 lakh tons?
Sir, next year the demand situation, the current stop that has happened to the funding will open up, and we are prepared to ramp up production from the capacity perspective.
Yes.
So both these scenarios put together simply would lead to us feeling कि ये तो हम कर ही लेंगे.
मतलब we'll be able to even supply and realize the money. 8.5 lakh tons.
I mean, so there's a quarter's delay usually. That is.
Yeah. No, realization, yes, I know, quarter delay. और सर ये valves का revenue जो है per year, what is the revenue expected?
Sir, last year the company did a revenue of around 36-37 million euros, which is around 350 crores. This year it will be, we might see a 10% growth on that. Starting next year, from our current estimates, there should be decent growth. To give you an exact number, sir, it will be incorrect at the moment because we've only started integrating. So if you allow us a little more time, we'll be able to give you more concrete numbers as per our plans for valves.
तो ये जो 350 CR आप बोल रहे हैं सर, that is for India as well as outside.
सर ये 350 largely outside है. अभी तो इस कंपनी का प्रेजेंस इंडिया में नेग्लिजिबल है.
अच्छा, तो कब तक हम एक्सपेक्ट करें कि इंडिया में भी एक्टिव हो जाएंगे?
Sir, next year, manufacturing setup and all the approvals and everything is already in process. And from next financial year, we will start selling in India, Middle East, and a little bit in Southeast Asia as well. So these are the three main markets which we will open up for the TIS valve business. At the moment, they largely operate within Europe.
और अपने पास मतलब next 5 to 7 years, what is the future prospects, sir?
For this product?
No, not for this product only. This product as well as our DI pipes.
Sir, we are fairly certain that going forward, growth in valves, our focus towards improving efficiencies at operating at full capacity. The package that we will offer to our customers, having valves, fittings, and pipes, there's definitely a USP in that.
Yeah, you will have an edge over others, no doubt about it.
And we are already starting to see, sentimentally at least, that play a little bit in Europe. We participated in multiple water expos and exhibitions. And the feedback from the customers are very, very positive. They already have a good impression of Electrosteel, and seeing that we will be able to cater to their need for valves, which is a very critical aspect. Albeit in terms of value terms, it's small, but in terms of criticality, it's very high.
Yes, correct, sir.
So all products coming from the same supplier gives them a lot of confidence, and we are confident that we can use this to gain an edge over our competition.
Yeah, that is surely going to happen because not any party in India at least has DI pipe and also valves.
Right, sir.
अच्छा सर, ये 150 लेवल CR का जो प्रॉफिट है क्वार्टरली, वो कब तक पहुंच पाएंगे सर?
सॉरी सर, 150?
अपना जो नॉर्मली 150 CR क्वार्टरली प्रॉफिट जो रहता था, नेट प्रॉफिट, अभी तो बहुत कम आ गया, तो इस लेवल तक वापस कब पहुंच पाएंगे सर?
Sir, I think Q2 next FY we should start seeing numbers close to that.
Okay, you want to say Q2 around FY27?
हाँ जी.
जी. और एक लास्ट क्वेश्चन है सर. हाँ बताइए सर.
यानी Q1 से पिकअप दिखेगा आपको and then
I know. Yeah. जी सर. सर ये BlackRock still they are the shareholders?
Yes, please.
Okay, with the same level?
Almost same level.
Okay, sir. Thank you, sir. Thank you very much. Bye.
Thank you. Our next question comes from the line of Vipul Kumar A. Shah from Sumangal Investments. Please go ahead.
Hi, thanks for the opportunity. So my question pertains to this coal block compensation. So there is a figure of 498 crores mentioned which has been approved. So when is it likely to flow? And is this the final verdict or are we going to appeal this?
So this is the valuation for one particular asset which had not been valued so far. It's close to our estimate as well. This probably, it would be incorrect for me to give any sort of deduction on when we can realize it, but there is active persuasion from the side of the new allottee and also the ministry. So hopefully within this financial year, we should see this work out.
So, but if this is not challenged in the higher court, then naturally that money should accrue in reasonable time. Is that understanding correct, sir?
Yes, please.
So you said this is valuation of one asset. So how many more assets are remaining to be valued, sir?
So there are two more big assets and then a plethora of smaller assets.
So two more are to be valued, or total two are there and one is valued?
Two more are to be valued.
Okay. And sir, my last question regards your capacity. On your presentation slide 5, it is mentioned that your capacity is 10,11,000, and whereas somewhere in the call you mentioned that our capacity is 8,50,000. So what I am missing is...
So that is an accumulation. That is an accumulation of all our products.
Okay.
This is the DI pipes. Then we have another 50,000 tons of CI pipes. Then we have 25,000 tons of DI fittings.
Okay.
So, yes,
so 850 is only for DI, right?
850 is only for DI, sir.
So right now, if we split our revenue between different products, what should be the percentages, sir? Roughly?
The DI pipe would be the highest chunk, which will be around 75%.
85.
75 to 80% will be DI pipes.
Okay.
And DI fittings would be around 5%.
Mm-hmm.
DI pipes also 5%.
Mm-hmm.
So these are the main items.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and then 1 to ask a question. Our next follow-up question comes from the line of Rudraksh Raheja from iThought Financial Consulting. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, you mentioned that government is like course correcting because of lot of complaints and everything. Is there any pattern like are these complaints pertaining to a specific product segment, or some region is affected, or some kind of players or products are affected? Like, just to get a sense on what kind of problem we are looking at.
Sorry. There is no pattern per se. There are three main, I would say, topics of issues. One is the incorrect physical implementation of the pipelines, financial mismanagement, and quality of water problems. So these are largely what you see as the topics of discussion. There is no specific product or specific contractor or specific state department issue per se. I mean, there are talks about UP having certain irregularities, but across the board you're seeing that actually.
Got it, sir. Sir, you mentioned something about that we are holding off currently on the 1 lakh ton expansion in the DI pipes. As and when we decide that we are going for it, how much time would it take to install that capacity?
I think it will take around 6 to 8 months for the capacity to get added. Another 3-4 months. You can say 1 year or so.
And the amount of capex that would be required for this?
Around 60 crores.
Understood, sir. Sir, a broad idea on our international business, like we have acquired this plant in Italy. Like, do we have a number in our mind that we want to achieve? I'm not talking about next year, let's say in 3 to 5 years, some kind of target with respect to our international revenues that we have, or the share of international revenues in our broader revenue mix, something along those lines that we are thinking.
I think, sir, I'll be equipped to answer that question to you by the end of this financial year, when we are doubly, triply certain about the potentials of the market. Today, any number I will give you will be based on a educated guess and without backup of a floor plan. So it won't be correct for me to share that with you.
Got it, sir. Fair enough. And when we say that acquiring this valves manufacturing plant, we can integrate that what we are supplying in India, like with DI pipes, we can add valves and all of that. Does that mean that valves would be manufactured in Italy, and we'll take that from that plant and then sell in India, or will we install a new plant in India for manufacturing that?
We are going to install a new plant in India as well. That plant will continue to cater largely to that geography itself. Some of the products that they make are very high value, low volume products and very specialized. So that today in India is imported entirely. So for that product, we continue to purchase from Italy and sell in India. But apart from that, the other day-to-day products that they are making, we will start manufacturing in India. In fact, we would like to manufacture in India and export them.
Got it, sir. And just the last question, if I can squeeze in. You said that last year this Italian business did around 350 crores of revenues. What was the utilization of the plant at those levels?
Sir, I would say around 70%, 70 to 75%.
Got it, sir. Thank you so much for your detailed answers.
Thank you. Our next question comes from the line of Hari Kumar S., an investor. Please go ahead.
Yeah, am I audible, sir?
Yeah.
Okay. Thanks for the opportunity, sir. Only one question. Regarding this international market, is there total lack of demand, or you are very highly competitive because we are not getting more orders which we are getting earlier? That's all, sir. Thank you.
Sorry, sir, your question was not very clear. Regarding the international market?
Is there total lack of demand, or there is more competitive intensity because we are not getting more export orders, which we are getting earlier?
No, you mean our interest in the international market?
Yes, sir. Yes, sir. Regarding the GA pipes.
So we've always been a company which has hedged its business geographically across the board. Historically also, Electrosteel has exported more than what the rest of the industry as a whole exports, and it remains so. A slowdown in the domestic market has allowed us to get a little more aggressive and soften the blow of the slowdown over here, I would say. So that's what it is.
Yeah, that's the point I was trying to get. Okay, sir. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I now hand the conference over to the management from Electrosteel Castings Limited for closing comments.
Thank you everyone for joining us today and your continued trust in our company. We remain committed to driving sustainable growth, strengthening our balance sheet and creating long-term value for all our shareholders. We appreciate your support and look forward to updating you on our progress in the coming quarters. Good day.
Thank you, everybody.
Thank you.
Thank you. On behalf of Electrosteel Castings Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.